How's the level, guys? Sound good? Awesome, guys. So, all right. So, again, we got definitely a lot to cover again. Again, I hope a lot of you watched last week's webinar because a lot of what I'm going to say is sort of based off of the things that I said last week. Again, the markets to me, what's happening is not surprising. I really hope you guys aren't sort of surprised by it. We sort of dropped off again today. I've been positioned short since last week for it. There was a lot of really interesting price action at the end of the week. So I was away Friday. I didn't get back to my charts till Sunday, and everything looked suspicious to me. I basically was posting on the forums, and I basically said, listen, this does not seem right to me. Everything seemed, we had that dramatic snapback, and it just didn't look right. We had these bad form pin bars everywhere. We had wick bars everywhere. Everything was just sort of sitting on a place that did not seem comfortable to me. So I'm not really surprised by the price action this week so far. Again, hopefully you guys sort of are with me a little bit or are watching on the forums. So let's get into it. I just wanted to cover firstly that the contest started. So again, I see a lot of you entering, which was, I think very exciting to see old faces, new faces. I think it'll get bigger as we go. And again, we're going to look to do prizes and stuff. This is just sort of to figure out the best way to do it. So far, it seems so good. Again, I'm really excited. So if you haven't seen it, guys, go to the forum. There's a contest section here. Make sure you read the rules first. Okay, so I have a set little bit of rules here to keep things structured. Again, nothing complicated, but sort of keep everybody on the same page. I'm sure these rules will change as we go. I just really wanted to figure out the best way to do this, because when we ran this way back in the day, it was just a mess. It was just too many potential errors, too much information to go through. I think the way that we have it set up now, we can sort of self-police ourselves, and everything's right there for everybody to see. There's no ability to cheat. And again, I know right now it's for fun, but if there's a prize for $1,000 or something, you can bet things can get interesting, even in a community, which I would say we're as good as it gets too. So, all right, that was the only thing I wanted to go over on the forums here, guys. Let's get to the charts. So again, I'm going to start with my S&P trade here. Again, it's from last week. A lot of it is based off of what we started last week too. So again, this is just continuation. But I got a lot of emails asking me about why wasn't I buying this week's pin bar here. So it's sort of, again, what I just touched on, how everything to me is sort of integrated to across the markets. There was a very common theme that we should not be buying into that sort of snapback that we had at the end of the week. And that was when we had last week's webinar here. Again, we saw the strong buying. So, S&P Dow, for example, Dow lost its biggest day ever. And, then price started retracing back just as hard. And then all of a sudden you have everybody going, it's time to buy. Let's load up. Everything's fine. Everything's solved in a couple days. Capitulation this, don't worry, your 401k is safe. And, like I said last week, that's the last thing I would be doing. I think the writing's been on the wall for weeks and weeks that you got to, protect your retirement accounts. And, it just made me nervous. And then to think just because we had some buying here that sellers aren't going to step in. Last week my friend texted me and said, oh man, I missed it. I should have bought after that huge drop. And I said, no. I said, what makes you think after the biggest down days that we've ever seen that we're not going to have sellers come in again? Again, do I think that we're going to have a fresh new lows here? I hope so. I believe so. I'm aiming for something like that. But at the very least, nobody thinks, in my opinion, that we're not just going to shoot straight back up. It's very unlikely in this situation here. But what I wanted to speak about is sort of where all these pin bars sat, and really it was across the board here. So if you guys have been following me on the forum, again, I'm short the Singapore yen, and again, we had a pin bar, and a lot of new folks are probably seeing these big pin bars and screaming, we got to buy, but they're all really sitting under support and resistance. Look at the close of this one underneath this support, underneath this price pivot zone. So what's the first thing I always tell you guys about a price pivot zone, where we want to be trading? Right? So if we have a price pivot zone and you got your pin bar, right, and here's your pin bar, You know, what's the first thing we always want with these price pivot zones, guys? Come on, nobody? Right, right. So Niche said trading away from the zone. So the one thing that I'm always cautious about is is this price pivot zone to our back, or are we trying to trade through it? And a common thing I always try to tell people is, you know, you might have a pin bar that sits like this, right? And you know, you think, okay, maybe the bottom of the zone is under us, and if we can just get above the top of the zone, we're cleared out. So let me buy above the top of the zone, or let me buy and see if this can break through this area. I just don't feel comfortable doing that most times, because you don't want to be that fresh new buyer here into the top of the zone and the thing turns around on you. Yes, if we're smart guys, you can always be cutting your losses, and you know, even on the, you know, equity indexes here, if you were going to be a buyer on a pin bar like this, there are ways around it. So for example, if you guys followed my non-FX thread where I sort of give you guys play-by-play on what I was doing, there was a point where I was considering a buy here. Now again, was I going to be a buyer on a break of this bar? No. Again, like I said, the main areas that I've been watching here are this gap area, right? So this, we can see this large box here, gap. It's a good place for price to turn into resistance. And then if we can get through there, this massive support here. So in my head, I'm really thinking about selling more than buying here. But now if we go to the weekly chart here and look at this pin bar here, look at this price pivot zone, right? So this is the exact example of what I was just showing you guys with the drawing down here. Are we above this zone with this being the bottom of the zone? Or are we trading into the top of the zone, right, with this being the top of the zone? It's a little bit confusing here. Now, what really solidified for me not to jump in overall or to get very excited about it, again, across the board, we saw this. Let me pull up a few charts here, guys. Just some of the crazy price action we had. So we had a lot of weekly wick bars, right? Euro New Zealand. Huge bar here. Do not mistake a huge wick and call this a pin bar, right? Too many people are doing that. Oh, look at this huge amount of sellers coming here. Oh, this means price is going to go down. Well, look at where price closed over here, right? We have the buyers keeping price above the last resistance zone. So what do we always talk about with wicks, right? What's the path of least resistance going to be? It's going to be through this wick area, right? So if you look at these bars not really as pin bars, well, again, a lot of them were not. This is not a pin bar. Or you look at a bar like this as a wick bar, if you're correct, the path of least resistance is going to be down through this area. So what I did is I sort of, I came back and sort of said, let me see how we close. Let me see how the next couple days are. So instead of just jumping in on the buy side, the very least was going to be a buy to the left eye here. So that would be, to me, the only real logical buy. So I maintained my trade from Friday. Again, I didn't even come back till Sunday to check. Watch Sunday night, and then I said, you know what, I'm going to watch this left eye area. Just sort of gauge what price does. Not going to just jump in. Again, I thought about it, but I said, let me just sort of see how the market's open. And what I mean by that is across the board again, right? So we have Canadian yen, another one, closing week. We have, let me pull up a few more here so you guys can see them. I have so many charts down here right now. We have the Euro Australian, which again, I put a pending buy-in for the monthly contest here, which will likely get pulled out here. Same thing, we had that weekly wick bar, right? Look where it closed. So I just wanted to sort of see how we opened up, how the markets were responding, and they were clear as day pretty much. Everything started to fill through their wicks. There's definitely a correlation across the board right now. You know, it's just really no surprise. And you know, again, the worst case scenario is, okay, price, you buy at the left eye here, right? So some of you may have bought in at the left eye, and then, all right, you get stopped out for a real small loss. There's certainly no reason to buy down here and leave your stop down here, right? What's going to hold this up? You know, so as technical traders, you know, times like this when things get very volatile, I believe we have sort of an upper hand from, you know, fundamental traders or long-term traders, because they're just trying to think about value, or trying to think about, oh, this was such a big move, this has to happen now. Whereas where we're looking at the flow, which is really what's going to move things in the short term, there's not a whole lot going on here. Now the last little thing here, and again, some of you may look at this, some of you may not. I sort of took just a peek at some of the ETFs, some of the indexes here. And if you look at all of them, for example, this is the SPY, which is, again, just the S&P 500 as an ETF. Again, here's that gap down, which was created from that initial huge down move we had last week, right? And then price snapped back up. Again, look where price isn't really over. You know, we're sort of stuck on it. Now look at the SPX. That's even more clear as day here. So here's the SPX here, right? Look at this. It's right under that box again. So the lower risk opportunity really is these as wick plays, right? So now I would get interested in buys if we can close above this area now. This is confirmed as resistance, right? I'm looking for us to fill through this wick. But now if we can get back above these areas, okay, then maybe we'll move into that next zone here. So again, I could see why some people got a little tricked here. Hopefully if you did, your losses were very small because, again, you know, you're either going to play a break of this, which I don't agree with. I don't think playing a break here makes sense. Or you're going to play a retrace to the left eye on a, you know, an index like the S&P 500. If you look at the Dow, for example, it's even more confusing. There's even more confusion here, right? Here's the Dow. Here's that weekly pin bar. What's going on here? So even on the Dow, are you going to buy the left eye? There's not a whole lot here, right? We have sort of a rough price pivot zone here, but you have that more major resistance and price pivot zone above us. So, you know, from my perspective here, it didn't really make a whole lot of sense to get excited about these bars. Even if they just say took off, I would be more interested in this area, really as a seller more than anything here. And you know, I just think it's common sense. You know, I was telling my family, you know, and helping them with their 401ks, you're not missing the big buy here. I just truly do not believe that even if this created a huge buy, that price is going to either get here and sell off again, or even if we create a new high here, create a new sell-off here. We're just so overextended in that aspect that I'd rather step back and wait for that retracement, which is hopefully what's getting put in now, which is a good thing, and then move forward from there. So again, I'm not going to rant off on that again because I went into that last week, but I just sort of wanted to give you guys an idea of where I'm at now with things here. So, all right, so Yaniv said you would buy with such a big crash. So I don't care about things crashing or retracing or how big of a move. For me, buying is about an opportunity created. So if you guys remember last week, I did buy this market, right? I bought this wick bar, right? So this was a perfect buy opportunity to me. This was a swing opportunity. Unfortunately, price moved up. I got to break even. It retraced and then moved up and filled the wick. But I have no problem buying on any type of move. It's all about the flow of the market, which we're using to, you know, our technicals to analyze when the best opportunities are to get involved. So I pretty much picked the bottom of this market. Again, didn't time it right. Happens. Just as I picked the top of this market, didn't time it right. Happens. You know, I explained that to you guys and was very clear last week about, you know, you can be right and know exactly what's going to happen pretty much, but you have to tie a game plan into that because otherwise you can't control your risk. And then you're sort of just like everybody else. You're just hoping, right? So people who are, you know, seeing this huge move up and buying on the market open or buying into last week, which is what made me stay in. We had extreme buying where price closed at the top of the market. And again, if you guys remember a couple webinars ago, when I did some of my mini Dow stuff with you guys, I said when you see that extreme buying into the close, and price closes up at the high or closes at the low, it's often a strong sign of a reversal. So you get that enthusiastic buying into the high here. That was very suspicious for me into this major resistance area, which is, again, a very large zone here. Again, you know, don't be surprised by this. If anything, if you're a little confused, you know, you're standing aside. There's definitely other things going on across the board that are interesting too. Again, like I said, I got involved in the Singapore yen wick play here, which price is just creeping down. I'm at break even now. But, you know, again, we're just using support and resistance here, you know, and we're just tying in other concepts. and it's not overly complicated. And, you know, with everybody saying what's going on here, the only thing that you needed to do during all of this is to watch your charts. You know, some of the other stuff I'm speaking about is sort of just more general, because I know a lot of us have other, you know, we're using trading in other different ways, or we're, you know, have other investment vehicles. So that's why I wanted to tie that stuff in, because these are unique opportunities and good opportunities. You know, personally, I think, again, you know, I think it'd be great to see a test of these lows. And that's when I think it's a better opportunity to start to move into longer term stuff here. And again, that's from a broader perspective. Obviously, you know, buying and selling individual stocks is slightly different than, you know, buying the general market here. All right, so that's all I had to go over, guys. That's sort of all I'm looking at here. So what else are you guys looking at, and any questions about this stuff here too? Okay, so let me see. Damien said, I am afraid I just fell into that trap on the USD yen, on the 120 big round number, 4-hour bullish pin bar close. So let's pull up the USD yen here, guys. And again, most stuff was pretty correlated this week. So again, that's why you don't want to get too big on an idea either, right? So I was watching also to buy the Euro Australian wick, which again, you can see this thing just taking off. And I was looking to buy the weekly. But when the markets opened, the spreads were a little high here, and there was a small little gap here. So I decided to just try to catch a limit order on a slight retrace here, and look what happened. So, you know, that's life, right? I had my stop higher. My initial stop was here. Again, very similar to the Singapore yen. But I also don't want to get overexposed, right? So on the Singapore yen wick play, I risked 0.75%, 0.75, and I had the same going on this here too. You know, you don't want to get overconfident either. So just because I was very suspicious of everything, you know, and Sunday I came back and I was sort of, you know, I was almost a little bit giddy because I said, oh man, this is not real. This is what happened last week is looked very fake to me. That doesn't mean you bet the farm, you know. You can't do that either. You have to have some sort of risk control within your ideas too. You know, that's what I say to you guys when you come to your charts one day and all you see are, you know, pin bars on every single yen pair. You know, the pound yen has a pin bar, the euro yen, the Canadian yen. We don't want to just go buying or selling all those bars. You're essentially just doubling, tripling your risk, because one works out, the other one is. Same thing with a concept like this. If the market was going to turn, right, or turn down, everything was going to, right? The Dow was going to rise, S&P was going to rise, Euro Australian was going to shoot down. You know, all those things were going to happen in tandem. So I don't want to be overexposed to just one idea. So let's pull up the USD yen though for Damien here before I keep going off. All right, so USD yen. Once I can find it. Okay, here we go. Okay, so Damien, you said you were looking on the 4-hour chart. Is that correct? So let's look at the 4-hour chart. Okay, so Damien said my actual entry was 2 30-minute bars equals a 60-minute bullish outside bar. Retrace entry at the 120. So let's pull up the 120 here, just so we have it, big round number. And let's just, you know, glance back a little bit here. So again, 120 is a clear price pivot zone, right? But it's a very large zone. This is an example of a very large zone, right? Because if you look, the resistance is up here, right? Support's down here. So that's a perfect example of this case here, right? Look at how we had that extreme buying, but we're still at that zone. So when the larger the zone you have, right, guys, the more you have to be careful where you are in relationship to that zone. And that's that same idea about localization we speak about every week, right? When you're trying to really pinpoint where that actual resistance and support might be breaking versus here's a general zone, let's now figure out a story within this area. So, all right, let's look at Damien's entry here, which he said was which was a 30-minute bars to get a 60-minute bullish outside bar. So, Damien, I'm guessing you took this bar and this bar here to create a bullish outside bar, and then you look to buy, I'm guessing, on a retrace to the 120. Is that correct? Whoops, sorry guys, let me go back. Okay, you said a bit neater on Oanda. Well, the only thing I would say is about it being neater on Oanda is these bars should be pretty universal, right? A 30-minute bar is a 30-minute bar, or all hourly closes happen at the same time. So I would really view this on the hourly chart. And again, that's when things get a little suspicious for me, right? That same idea of that, here's that price pivot zone, here's that large move down. Look at how small this sort of is. Now, again, Damien, I think you did the right thing by taking a retrace entry here. And again, we can see a little bit of bouncing in this area here. But again, in terms of a story, Damien, there's not a whole lot here. So you're really trying to just buy a bullish outside bar against a strong downtrend at a big round number. So you kind of got to be nimble in that case there. And after such extreme selling, I would just be cautious. And again, when we throw in that big price pivot zone here, Damien, things start to look a little bit more funky in my opinion here. So, is it the worst thing? No. But is there a lot of information here to be buying? Is there a lot of confluence? We got to think, what's our story? Story. Is there a lot of story here? No. Now, I think what's happening now is more interesting, right? So now we're boxing. So now we get a little bit more information where, for example, Damien, let's say price confirms this box top, pulls down, and then we can get above that area. Okay, then we can be a buyer. So a little bit tricky here. Again, not a whole lot of information yet. I would just be patient with a situation like this and just let this box form and give us more information. A fake break higher, close below, something like that is going to be a little bit better for us there. All right, so Damien, does that make sense? Okay, so Damien said we got a good 4-hour bullish pin bar to give confirmation. So again, I don't have a 4-hour pin bar. These are not pin bars, Damien, so just be careful. These are inside bars. Again, your feed might look different, but even if we find, let's see if we have one here. So again, I don't see a okay, so maybe this is your 4-hour pin bar, these bars here. But again, it's going to be that same thing, right? What's the problem with this 4-hour pin bar? Right? Go back to basics. What's the problem with this 4-hour pin bar? Right. Andrew said it. It's small, right? And again, that's why we always speak about, everything needs to be in relationship to everything. Right? So is that 4-hour pin bar enough? Again, we pull in all the confluence here and we say, all right, here's a pivot. Right? Do we have any localization of the pivot here? No. So we have a strong support and resistance area occurring here, giving us that broad zone. And now here's that broad zone again. If we had, Damien, let's say price came down here, bounced, created a nice swing, giving us a nice strong confirmation or localization of where the support and resistance is. Then we fell down. Then we create a pin bar closing back above that swing point, above that big round number. Now you're in business, right? So does that make more sense, Damien? When you start to lack that information, it's going to make it a lot harder to pinpoint. And then what you're going to see, and Damien, I'm sure what you saw, again, I don't know if you were able to cut out, is that all of a sudden you start to get handcuffed on your trade management, right? Because you start to doubt, well, maybe price needs to come back down a little bit more, so I'll give it a little bit more room. You start to, lack where price should or shouldn't be, right? Because you don't have good control of that area. So that's what I always tell people about support and resistance. Everybody knows what support and resistance is, right? Everybody can pick it out, but the difference between somebody who understands what they're looking at, to me, is really understanding the longer and the shorter term support and resistance, so that you can tie that into a solid trade management, right? Which is that dynamic risk reward, which is, pinpointing your areas better so you have more control over that situation. All right, so that's my take on USD-Yen. Again, volatility is going to stick around for a while, guys, so there's going to be plenty to do. All right, let me scroll up here. I think I'm up to, I believe I'm up to Matt. Matt said, any comment on a lower 1/3 inside bar? So Matt, what does that mean? What's a 1/3 inside bar? Or was that for a chart we were looking at? Okay, an inside bar in the lower third or upper third of a big bar. So the S&P, so let's check it out. Okay, so do you mean this one? Right, so this one, Matt, is the one that I bought, right? So do you remember, now does that make sense why I bought this inside bar? And why I actually liked that fake breakout? Because we're going to use that wick to push price through, right? So the inside bar to me is not really the interesting part, right? Because we have a huge down move and then a huge inside bar. So I'm not really interested in the aspect of it being an inside bar. I'm interested in who's controlling the buyers and sellers within that area, right? For me, inside bars are going to be more interesting when you have a decreasing range, you know? So you have that idea of here's your range getting smaller, and now an inside bar break is going to create a big move out from a breakout. Generally, an inside bar like this is not going to give you that breakout dynamic. So for me, the understanding really comes down to the highs and lows and the opens and closes within this area. All right, so Matt said, I know that, but I'm wondering if you find these inside bars to indicate a directional change. No, so I don't really find inside bars, personally, I don't like to use inside bars for directional change. You know, for example, let's say this inside bar only had a high up to here, right? And we had the same open and close. You might use the same idea, but, you know, I'm going to not really be as interested in this situation now, because now we have a huge move down followed by a slight pause in the market versus price shooting all the way back up here and coming all the way back down. What I'm interested in is what creates that inside bar, Matt, and any situation. So what creates the order flow that's now been used up, and how the market has reacted and finished that inside bar versus, so let's say, Matt, we look for an inside bar, you know, in sort of a small range here. So here's a tiny inside bar. You know, again, it's so small we can't even really figure out much here. But when I see inside bars like this, Matt, I'm not paying attention to them. You know, basically I'm just looking at them as you know, small range bars within previous bars. We want to see those at nice areas here. And again, if you have an inside bar that you know, gives you that shape, like here's one, right? That's the same idea. Well, you know, I'm going to be more prone to be a seller on that inside bar, right? Because we have a wick to fill through, and then above us we have a resistance. So I'm not going to buy a breakout of that inside bar, but I'm also not going to be a seller on that inside bar into support. So I think inside bars are one of the trickier bars to play because you're going to see them all over your charts, right? You know, all it is a bar that's range is smaller than the previous bar, right? Well, contained within the previous bar's range. So, you know, we're going to get those loaded all over the chart. But an inside bar like this to me is much more interesting because of, again, all the other dynamics that go along with it and the volatility to sort of help us through. And again, likewise here, now that we're sort of under and back into this area of the buyers, you know, really this should hold us down. And, you know, I don't see buyers wanting to really be buyers over here. You know, yeah, we're going to see buying and selling in volatile markets. So we might see price snap up, but you know, if you're a true buyer, wouldn't you want to buy more near the area where the strongest buying occurred as opposed to just right randomly here? Again, doesn't mean price can't snap back up and turn around here. We always know that as traders. But in terms of logics, well, you know, here's the short-term pivot, right? Support, resistance down here, support up here. So this creates our zone. So again, that wouldn't surprise me to see price pull back again and come down. But in terms about being a buyer, well, you know, as a technical person, I'm going to be a buyer here, which is, again, a logical place to take profit at this point. But what's to hold us up here? So we see this as here's the important areas, right? Down here, you know, I see this as weak buyers in here. Just as I don't really want to be a seller in here either. I'd want to be a seller up here again. So if you're going to try to play this smart and say, all right, let's say price closes here, I'm going to put a sell up here, right, catch a retrace, and try to maintain under this more major area. So again, we're just trying to find that flow and then sort of look, well, where's that path of least resistance through these areas, or where is there resistance that we should get out? And a perfect example of that is, I know Niche is with us here. So let me pull up his trade. And again, I'm not sure if Niche you got out or maintained it, but Niche took a wick play on the Australia New Zealand, which was another one on the weekly that gave us a wick bar, right? So here's that wick bar, right? Now, if we analyze this, we see here's this strong selling, right? But if we look at this situation here, the buyers kept us controlled above this box here. So there's a good chance that price is going to move through this wick higher. But also we have to see, well, we're in a lot of congestion here, right? So what Niche had said he was going to do is he bought in here near the open. Again, got in a little bit lower here. And then he said to me yesterday when we were up here, or maybe it was this morning, I don't even remember, Niche, Mike, what do you think at this point? When should I get to break even? I'm sort of confused. Well, again, we're still using that idea of support and resistance. But now we know prices got all the way up there. So I told him I would get out here because there's just such a high probability that you might fluctuate around this area before moving higher or collapsing down. So again, all these concepts all tie back to similar things of traffic versus space and the very basics of what we try to teach you guys from the beginning. Some of this stuff just gets more advanced because situational becomes more, each situation is sort of independent too, so you have to be able to tie in those concepts. Okay, so M said, when will you move your stop loss to break even on the S&P? Again, I said this morning that I'm just not ready to do that yet. Do I want to take a loss here? No, but like I was just saying now, depending on where we close today, I'm not going to be surprised to see another pullback. But I'm certainly not ready to give up on this position yet. So not quite ready. Let's say we did this tomorrow, right? Let's say we pull back overnight, start to pull back down. Then I'll go to break even or move it above the swing point. Or likewise, if we start to collapse into this area, that's when I'll look to either close out, get to break even, and just maybe let this one run. Cases like this, I'm not afraid to take a break even, take a small loss, because if this runs, it could run deep. And we know that, right? Look how volatile these markets have been. So, yes, is there a chance that this could just start to swing back up today? And then maybe we close above here. And then I have to decide again, well, how good is that close? Maybe it's time to get out as well, too. But, again, I have a lot of control now over this, I feel like. All right, let me see. So I think I'm up to... Mad, right? Is that right? Okay, so Mad said, any thoughts on the pound USD weekly bearish outside bar? So, again, we spoke about the pound last week, too, and it's pretty much range-bound. So a little bit tricky, but let's pull it up. So again, I haven't been watching too much on the pound here. Again, we spoke last week about this, right? How some of you might play, or it was on the forums, I believe. Possibly, I think it was Minnie's question. You could use this as a 2-day bearish outside bar, pressing up on this trend line as a breakout. You could see it breaking out now, maintaining under this big round number. But likewise, I said, you got to be careful because you're selling into a lot of stuff here, right? Pretty congested overall. So if we look at the weekly bar, we're going to sort of see that, right? Weekly bearish outside bar, right? Look at what we're dealing with here. So when I see that, guys, I'm done. I'm just done with it because, it's just really tough to trade a situation like this. So when I see other markets that are smooth and flowing and we have all this space and, these more concrete support and resistance areas, that's where I'm going to gravitate towards. When I see something like this, I'll say, okay, there's a good chance this holds as support, right, on a retrace back to this pivot. But you got a lot of mess under here, so you're going to have to babysit a trade like this, right? So that I find very difficult. Again, some people love this. Some people love markets that are real tight like this because you're usually going to get a bounce somewhere. So you'll usually get a bounce up here, which we did. And you'll usually get a bounce down here. So, you'll probably see buyers coming here. They might push price up, and then price might collapse down. Or this might hold us, and we'll stay back in this range too. So, okay, so Matt said I took a retrace to 1.54, which looks like you nailed it. Again, but if I was in a trade like that, at this point, I'd be at break even. So, Matt says he's at break even. So, I have no problem with that. It's going to come down to you guys individually to what you're comfortable with. Some things are going to pique your interest more than other things, and that doesn't mean it has to pique my interest. If I got in at 1.54, I'd be at break even, and maybe I'd target a little bit lower here. But, you know, this is not a trade for me that I'm going to look to catch a runner down to here. Could price run down to here and this be the bar that tips us off? Absolutely, right? Absolutely could. But within that, there will probably be other opportunities or other, you know, easier, smoother entries to get involved with. And they might be on the daily, they might be on the 4-hour, they might occur around this pivot, which is a lot neater. Right? Look at the support, resistance, boxing. So, you know, for me, when I see a market like this, I'm going to be most interested in, say, an area like this, or maybe if we get back up above into the 1.6 here. But you're perfect. If you went to break even, and, you know, that's what we want to see you guys doing for sure. And again, a simple rule is the more choppy, the more you should babysit it, the more aggressive you should be with your stops, in my opinion, because the higher probability things are going to, you know, chop around on you. All right, so let's see. I believe I am at, so I think I'm at Univ here. Again, guys, if I miss something, just post it. We'll get to it. So, okay, Univ said, Mike, can you have a look at the New Zealand-Canadian 30-minute chart at the 839 area? So let's pull up New Zealand-Canadian, which also filled back through a wick here, but it was pretty sloppy. Pretty sloppy wick here. Again, this one was, you know, here's that wick, here's price trickling down back through it, right? So buyers get absorbed, price trickles back down, but, you know, this is tricky here because this is just a messy situation here. So if anybody is watching that wick, I didn't even give it a second look. I think that's very difficult here. But, okay, let's see Univ's trade, which is on a 30-minute chart. All right, so Univ said 2 30-minute bars to get a bearish outside bar. So I'm guessing here's your bearish outside bar, Univ. Is that correct? Or maybe you took this smaller one here. So the first one, right? And then let me see what you said. So at the 839 area. So I don't mind that one. If we look here, there's a nice trend line here. So looks pretty accurate to me too. Again, not my style of trade here necessarily, but certainly, you know, downtrend. Here's a pullback of this move, right? It's 50%. We can throw up a fib, but, you know, we're going to see it here. So here's that 50% retracement of this move, right? Pull back under the trend line here. Again, I think you might either try to catch a small retrace, but likely that's such a small amount of pips here that hopefully you entered on the close there, Univ. That would make sense to me. Then watch this area here, right? Perfect. So Univ said he entered on the close. Then again, this sort of right where it went to is a good sort of target in my opinion here. Again, you might target the lows here, but I'm going to find that difficult to do here. I would say, you know, after that drop there, you're probably taking profit, getting to break even. Price drops down again, you know, somewhere within that area here. Maybe you held on, but I don't see many people holding on a pullback there. But, you know, nothing wrong with that. I think it's a solid trade, Univ. A little bit tricky. Just being a 30-minute time frame, you know, these things can move quick here. I'm curious what the 15-minute looks like here. So, again, sort of could have possibly caught a little bit of an earlier entry here, right? Just buying that, selling that breakout of this bearish outside bar, but nothing wrong with it. So, Univ said 8834 is his target here. So, it looks like you caught it perfect almost. Looks like you did catch it perfect. So, pretty impressive right there, Univ. Again, just got to be careful with these guys because, you know, if you're not nimble in these areas and, you know, this thing starts retracing and, you know, you let it get all the way up here or something, you know, you could take a pretty big loss in a situation that, if you're correct, it really shouldn't have to do all that for you and retrace that far. All right, so let's keep going through here. I knew you guys would have a lot of trades and questions. Of course, we had just a lot of stuff going here. All right, so pound Canadian, this is another interesting one that I've been sort of casually watching. I know a few of you have been into it. There was a big 4-hour bearish outside bar. Big 4-hour bearish outside bar engulfing a nice range here. But a little bit tricky because we're trading into some pretty strong support areas here. And then on the weekly, we had this big bearish outside bar. And again, this was another case here where I just sort of wasn't buying it. I wasn't into this bearish outside bar. Now, we spoke about this one, and Niche had actually posted on the forums, and said this one caught his eye too, not surprisingly. And he basically said, Mike, what do you think about this? And I said, I'm not liking what we're trading into here, right? Right where we are now. I'm not liking that. So if you're going to play this, where are you going to take it? You got to take it on a retrace, right? So we have the big round number up here, 2.05, right? So that's a logical retrace point here. And, why do we want to do that? Because you want to give yourself the opportunity to get in at an appropriate price. And also, you do not want to be a seller on this bearish outside bar into this support, guys. When you can understand that in this situation that, okay, you might decide to take this, but you're only going to play it on the retrace, and you're not going to trade that break, you're going to be light years ahead. And you're going to take a lot less losses, you're going to have a lot more profit, and your loss is going to be a lot smaller here. So, Hitch, I'm not sure if you played this one, but if you did, I hope you played it on a retrace. Again, we can see that pivot in there, right? We can see those bar highs. It's a small one. Again, it's a minor pivot from a weekly standpoint, but it's the only way to do it. So Hitch said I played it on a retrace. So, I can't be anything but happy for you guys doing that, because when this thing starts turning down, if your stop's up here, guys, your entries say, I would say most people put their entry a little bit under that big round number, just to make sure you get in there. Stops above the high here. As this thing starts to turn down into the lows of that bearish outside bar, I'm taking my stop and going and putting it right above the high. So now your risk goes from this to this, right? Now when you're here, your profit's this, right? Or maybe you go to break even and you say, you know what? This is strong support, but if this thing gets under here, we're headed down here, right? Because there's nothing in the way of us till we get over here. Now, I passed on it because I just wasn't comfortable. I thought there were other things that I found more interesting, right? And this is another scenario where, you don't want to overdo yourself in 1 week. You don't want to have 20% open risk on the market on 1 week's worth of data here. But what I was basically saying to myself is I'm going to watch this area here. And I'd like to see if we can hold as some good support here, which we're doing. And then I can watch for price action here, right? So imagine we get this tomorrow. What do you think we're going to do here? Well, we're going to sell a retrace. And boom, where are we going? We're going down here. So there's other opportunities I see in a case like this that I would just be careful. But if you're going to play that weekly and you play it like Hitch did, perfect. That's the way to do it. And again, it's not complicated. Knowing when to buy, sell, whether it's on a close or retrace or on a break of the bar, it gets very obvious very quickly, guys. We spent, it's got to be, 4 or 5 months going over that idea in my webinars over and over and over again. And, by the end of it, every time I would ask you guys what the best idea is, most of you would get it. I would say 95% understood what the best, situation is here. Because think about it. Imagine you sold a break here. Selling into this, well, where's our first trouble area, right? How do we know our first trouble area, right? What do we use to determine our first trouble area, guys? Again, the core of the material. He might not be around yet, but certainly that material should be in your head. Right, bar highs and lows, but not just that. But what is the what do we call it in the group? Right, there's a whole series of videos done, not by me. Close. I'll give you guys a hint. James did the videos, not me. Right. So Jim said it. Where's price going, guys? Right. So I'm assuming everybody here has seen those videos, and hopefully many more times than one time, because those, in my opinion, are the strongest videos on this site. It's not everything, but when you can understand that, you can develop game plans for solid trades around that. So if we're looking at this bearish outside bar, we're saying, where's price going? It's going to these bar lows. Then we're saying, well, where's price going on a retrace? Going to these bar highs. It's going to this big round number. So am I going to be a seller into these bar lows? No, because where's price going? There. I don't want to have a stop loss here sell a break here, and here's where I have to start worrying about this trade. Okay, yeah, I can move my stop loss down here, so now I got about half my risk on. Great. But what if this thing reverses right now? It's a situation that is no good, right? This could just be a box starting to form around here. But if you know, okay, where's price going on a retrace? Let me get in here on a retrace. Maybe stick your stop there, or maybe you like to stick it lower to start. Use a little bit of a bigger position size. Again, I don't know. We'll see what some of you guys do in the contest, right? Well, now you're giving yourself a chance for not only a very nice profitable trade, but also the chance to be caught in a runner here, right? Because if you sell a break here, here's where price is going, and you go to break even when price gets here, or you're gonna drive yourself mad. You're gonna absolutely drive yourself crazy because you're gonna get stopped out for break even, and then maybe it takes off. Or price is gonna turn around, and now you got a 2% loss on your hands. Not worth it. So if you integrate those ideas of where's price going, what's the best entry here, right? All these little things here, and you wait for good trades, you're going to put yourself in a situation where, let's say Hitch took this, right? And let's say price kept going higher here. Well, okay, maybe he cuts out here and takes a small loss, right? But now that loss is very small in comparison to the person who sells here and takes a loss up here. And, that idea of, again, I say it every week now, dynamic risk reward, or however you want to view it about cutting your losses. Again, I just try to give you guys a real way of how I do it, because you hear it all the time, but not a lot of people show you. If you integrate that idea, you're always going to keep yourself in the game. And then when you pick winners, you're going to be fine. And that's sort of the biggest lesson I ever learned, was that in the long run, it's just critical to in my success personally. All right, so does that make sense? Everybody understand? So Hitch, are you sticking around on this one? It's probably pretty tempting to, right? Probably just go to break even, let it rip. With the volatility in the markets, to me, yes, you could be giving up. Let's say you risked 3%, maybe 2.5%. So that's a lot of profit to give up too. But situations like this too, if this thing takes off, it could be huge too. So you're out. I have no problems with that either. I mean, that's a nice little profit there, and it doesn't take a lot of those, right? A couple of those a month, and you're doing better than 99% of the people out there. And that's the biggest thing to understand too. Everything doesn't have to be a huge runner, right? All right, guys. So that's pound Canadian. All right, so I think I'm all caught up here. All right, so what else, guys? We got a little time left. All right, so Andrew said on the pound Australian 4-hour, we have a very cute trend line. Now, that's a first I've ever heard somebody describe a trend line as cute, Andrew. So let's look at Andrew's cute trend line with 3 touches and a strong price pivot zone to go short, but we need to wait a bit. Okay, so pound Australian was also interesting. Let's touch on that too. Right, so here's the pound Australian weekly pin bar, right? Did close under these highs, but it just didn't seem right? It sort of seemed like it was sitting on these closes and opens, along with everything else here. Then price actually gapped up to start the week above the highs, which pretty much destroyed this trade, right? This is going to be a beauty, guys, when we close under this area, because we've localized price now, right? This is a strong, accurate support and resistance area, right? So when we can, right? Maybe we come up, maybe we start to come down now, get back under here. We're gonna have a great area to look for a touch trade or a price action trade into this box here. So again, just another example of some of the sort of iffy price action, but there is a gap here. So who knows? We could see some strong reversals now too. Everything has done what it's supposed to do. In terms of if things start reversing now, there shouldn't be big losses. We understand prices moved. But, for example, let's say we get a big 4-hour bearish outside bar here, right? What are we going to do? Sell it back into this box. You all can see this box, right? So that pin bar sort of closed right on top of it. Now, if this weekly pin bar could have closed, say, here, just above those highs, that would have been another wick play I would have taken. But it was sort of in between, and with everything else I said, I'm just going to leave this one, right? Maybe you sold it if it opened right where it closed, right, and you watch and see if those left eye bar highs can hold us down, right? So even if some of you did take sells, let's say that didn't gap there, you're still going to take a small loss. So it's not the worst thing to have that opinion and be wrong. And I want you guys to understand that. I don't think everybody should have said none of these bars are tradable. But if you did take them, your losses should be so small, right? And that's what I've been trying to say every week, guys, is, you know, I might have 3-4 losses in a row, but they're so small that that next win wipes them out, right? And then I have a couple winners in a row, and I'm, you know, back to profitability, right? And that's, again, off of the pound Canadian, same idea. So let me stop and go back to Andrew's question here. All right, so Andrew said we have 3 touches here. I'm guessing he's looking down here, right? So is this what you're looking at, Andrew? This trend line. He's saying a strong price pivot zone to go short, but we need to wait a bit. Okay, so I don't mind your trend line, Andrew. I know the price pivot zone you're looking at is right here, right? Right, support. Now we're at that resistance. Maybe we start to push into this area. But I think that since this is just a trend line here, oh, you said no lower. Okay, so you want to use this pivot, integrate into that box. So it's basically the same idea, Andrew. The only difference is now as time goes by, right, we're going to move towards that trend line at a higher point of it, and it's going to become a little bit tricky to use, right? Because if we don't start to move down now to use it, it could get a little bit funky. Do you know what I mean by that, Andrew? Right? Let's say we start to drift down, and then we drift a little higher, and then we drift down. All of a sudden, we might get, say, oh, here's a bearish outside bar, but now we're too high above it. So the key to this area is what I was just speaking about, what you're speaking about. It's that price pivot zone, right? So if it integrates with this trend line, great, right? Like I said, imagine we get this right now, Andrew, right? We got a big old bearish outside bar tonight. Maybe something happens on the Australian, right? Well, fine. That's okay. But if you get too far away, Andrew, that could just act as support and push us higher too. So the key is this. This is the key, guys. You know, whether it's tomorrow we close under it or we spend a whole bunch of time and then close under it, right? And then the more time you spend away from this area, right? Let's say price goes higher, maybe retrace a little, comes a little bit higher, comes down, comes out, comes down. What do we need to see happen over here as time goes by? Right now we're okay, but as time goes by, what do we need to see before we say, all right, I'm going to be a seller when we get under this area? And again, integrate one of the first concepts we talked about today. Well, you guys got it. I was waiting a little bit, but David said it right away. Minnie also got it too, who's new, so you're doing great. Yeah, we want to localize it, right? So as time goes by here, great support and resistance area, very accurate, right? So this is not a zone that looks like this, guys. This is a zone that looks like this. So if price comes by here and starts to take off, or even goes higher, or whatever it is, just look for a confirmation here, right? That confirmation there. And then when price gets under it is what's going to make you put you in just a fantastic situation. That is what's going to make you money. Not if the price just comes down here and we're sort of stuck on it, because you just don't know where it is then, because price spends so much time away from it. So let you know the market confirm it, which it's doing right now. Right. So now, again, like I said, if you know, let's say tomorrow we get a daily bearish outside bar that looks like this. Right? We're confirmed, right? We have resistance, 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 support. That support there is the confirmation. Okay, I'm going to sell a retrace to that resistance. Price is going to go to that middle of the box. First target, final target would be the lower part of the box, right? Again, if that happens, or we might cruise back up through the weekly wick here, right? So sellers might start to come back in here then, which is sort of the theme, what the market's trying to do right now. But again, like I said, at this point, everything's sort of done what you might expect. Let the market tell you the next move. That's what I'm waiting for now. I'm not saying, you know, and that's what people get confused, but traders understand. Yeah, sure, I'm short here, and I'm feeling great, right? Dow's down 400-something points. S&P is down 50 points. But if price starts to turn back around, I'm not shocked by it. But I know what to watch in order to determine when I need to get away from it or go on to the next thing, right? So that's sort of the key for me with any situation. All right, guys. We got a few minutes here. I don't want to jump out too early on you. So anything else you guys are looking at before we wrap up? A lot of stuff here, guys. All right, Nick said anything else you were looking at? Not a whole lot. Let me see here. What was I looking at before? Sort of casually watching USD Singapore dollar here, guys. Right, so we have nice resistance points here. So this is sort of going to get interesting here, right? So I'm sort of watching this. Again, we have sort of a rough wedge here, but I'm not really interested in the downside. I'm interested in this area, right? So this is pretty nice. So maybe we get a breakout, right? And it holds as support, or a false breakout. So this is sort of one of the few things on my immediate watch list here. Not watching a whole lot. Other than that, I'm sort of just maintaining my trades niche. Again, I got a little bit of exposure out there, so I'm sort of just hanging on to those. But this is sort of the only real thing on my watch list right now. Yep, I had a few. I canceled one, guys, right? So let's go over that, right? So you guys can follow. A lot of the trades that I'm going to post in the contest are just going to be ones that I'm going to take anyway as normal. I'm not going to try to be crazy in the contest. I don't want you guys to try to, oh, Mike's going to take a 30 pip stop loss with a 2% risk, and let's say I nail it and I make 12% on that trade. I'm not going to treat the contest that way. Because too many of you are looking at me, especially if you're learning. So I'm going to play the contest a little bit more, how I'm going to take my trades anyway. I guess I should have probably said that in the contest thread here. I just want to be more cautious than some of you might choose to be, especially when prize is on the table. That's a little bit different, right? If you're in a contest and there's no, risk to losing, and you see somebody's up 10% and it's the last couple days of the month, and there's $500 to be won, well, what is everybody going to do? You're going to take crazy risk. But I kind of want to curb against that as much as possible going forward, because I want to sort of think it's important. Maybe we have some that are like that, but I want to see how much we can reward good behavior so that we teach people that. But obviously, I don't want to take away those of you who might have better control of your trading, and you can do things that maybe I can or somebody else can. I think we have to try to strike the balance between that. So these contests are going to be good to learn that. So again, you guys know I had a retrace entry here in the contest, right? Nice boxing right under the 190. Here's a nice little wick here. I was hoping we get a pullback into this area before that wick filled. We filled that wick now. I'm done. So although this is still a good area to watch, it's not a good area for me to touch trade. So I pulled that order. That I had. I'm about to pull this Euro Australian order too, right? Here's the monthly I posted yesterday. I'm going to pull it after this webinar for you guys. Look at this support here. Resistance. Resistance confirmed. Strong close. I was hoping we'd get a pullback today and then fill through that wick. We just going straight up, right? But again, I don't want to be a buyer at that close there. It's too far away, right? So no niche. I did not get into this one. Right, so I had been looking at it on a weekly here, but I had a buy limit because spreads were a little high on the market open. Right, I didn't feel like getting buying in at the ask 20 pips higher or something. So I said, let me catch a little pullback here. There was some small gaps. Whoops, there were some small gaps on these markets. So I said, you know what, maybe price will just pull back a little bit and take off. And I was already in the Singapore yen. That I sold on market. So again, at this point, I'm done. So again, this is just what trading is. You can know what's going on, have a great idea, but your trade plan needs to come together, because then otherwise you start bending your rules too much. There's always parts of trading that I say that you need to be flexible. I wouldn't call it unlucky. So I've had a lot of calls this year that have sort of just missed me, and some big ones too. I don't like to look at it as unlucky. I like, exactly, Matt said it. I like to look at it as discipline, because if you start looking at things as unlucky, or I should have done this, and then you start to bend your rules too much, then where do I draw the line between all my trades? Should I always enter them on the open because I don't want to miss this, right? Or is it more proper to enter here on the ones that do, right, so I can reduce my risk better, right? So there's a fine line between the two, niche, and I do think that's a lot of personal things too, right? Sometimes you do this, sometimes you do that, but you always got to sort of find that center point with your trading. So again, I had 2 trades on the contest so far. They have not executed, so I still got 5 left though, right? Unless something executes, guys, you get 5 trades. So I'm going to cancel this one too, and again, it's only September 1st, so we got a long way to go, guys. Let me see. So let me end here with M's question here. M said, Mike, do you close those wick plays at a break of the wick or just the previous high low? So M, do you mean to the upside or the downside? So do you mean where do I close them out? Meaning if let's say I was in this one, we want to exit here? Or do you mean my stop loss? Yeah, generally my target is the towards the high of the wick, not the tippy high, right? Because where are sellers going to come in when they see this, right? Sellers going to come in near the last strong point of selling. So generally speaking, that's where I'm going to get out. At the least, I'm going to be to break even. So I generally like to get to break even about halfway up, 3/4 of the way up. Again, Singapore yen, I'm already at break even, right? So we're about halfway there. There could easily be another pullback here, but at that point, I'd sort of just rather reevaluate this, and we might even find something on a lower time frame, find another price action situation. But again, you can see my target on this one, just a little bit above that high. Look at that support and resistance here, right? So this is strong stuff here. Confirmed. This is going to happen or this is going to happen, right? So another fantastic area. So, I mean, however you cut it, there's a lot of good stuff out there to watch now, guys. And, just be patient. Don't get antsy because things are moving and you're not involved. That's just what trading is. And, again, that discipline is critical. Hopefully some of this contest stuff, those of you who are struggling, can start to jump in, and now you have some rules to guide you. Instead of taking 40 trades a month at 2% risk, you're only allowed 5. Maybe this will help guide you guys a little bit. And obviously that's, as much as I want it to be fun, I want to also make sure that we're looking to get you guys on track that are struggling too. Okay, on that note, guys, I'm going to wrap this one up. As always, thank you for coming. Appreciate it. You guys know that. And, if you have questions, you guys know where to find me. Thanks, guys. Appreciate it. Have a good one.